This video covers Hawalah concept in Islamic banking and finance industry, the transaction structure, principles, and key applications of Hawalah contract in Islamic banking and finance. According to Sharia Standard 7 titled Hawalah, the standard has been published by Accounting and Auditing Organization of Islamic Financial Institutions. Before we get into Hawalah, we have made various videos covering various topics within Islamic banking and finance sector. To have your input for upcoming videos, leave a comment or email us a topic of your choice within Islamic banking and finance industry, and we'll prepare a video covering most recommended topic. Coming back to Hawalah. Hawalah is the transfer of debt from the transferor to the payer. This involves transfer of right as well as transfer of debt. The transfer of debt differs from transfer of right in the sense that in transfer of debt, a debtor is replaced by another debtor, where in a transfer of right, a creditor is replaced by another creditor. Accounting and Auditing Organization of Islamic Financial Institutions have issued a Sharia standard number 7 titled Hawalah that covers Hawalah contract in detail. Hawalah of debt, just like I mentioned earlier, is the transfer of debt from the transferor to the payer, while transfer right, on the other hand, is a replacement of a creditor with another creditor. There are two types of Hawalah contract, restricted Hawalah and unrestricted Hawalah. Restricted Hawalah is a transaction where payer is restricted to settling the amount of the transferred debt from the amount of a financial or tangible asset that belongs to the transferor and is in the possession of the payer. Unrestricted Hawalah is a kind of transfer of debt in which the transferor is not a creditor to the payer of debt, and the payer undertakes to pay the amount of debt owed by the transferor from his own funds and to have the recourse by the transferor for settlement, provided that the transfer of payment was made on the order of transferor. To be permissible Hawalah contract, Sharia standard lists certain conditions. It requires the consent of all parties, namely transferor, transferee, and the payer, requires that the transferred be a debtor to the transferee, a transaction in which a non-debtor transfers another is an agency contract for collection of debt. In Hawalah, that the payer be a debtor to the transferor. If the payer is not a debtor to the transferor, the Hawalah will be an unrestricted Hawalah. All Hawalah parties be legally competent to act independently. Both the transferred debt and the debt to be used for settlement be known to the parties and transferable. For concluding restricted Hawalah, the transferred debt or the transferred portion of the debt be equal to the debt owed to the transferee in terms of kind, type, quality, and amount. However, the transferor may transfer a lesser amount of a debt owed to the transferee to be settled from a larger amount owed by the transferor on condition that the transferee be entitled only to the equivalent amount of his debt. Application of Hawalah contracts in day-to-day Islamic banking industry include issuance of check from current account to a creditor, overdraft, traveler's check, bills of exchange, endorsement of a negotiable instrument, transfer of money and remittance. There is one thing I would like to mention here, that in news we always hear that the money was transferred through Hawalah for illegal purposes. The factor that news agencies don't mention that it's not the Hawalah that is illegal, is the fact that money is not remitted through government registered channels and not documented. It's nothing to do with Hawalah contract or concept. It's a failure of controls, whether intentional or unintentional. Structure of Hawalah. Let's take example of a bank and an entity or an individual. One takes funds from a bank, and that makes the bank a creditor, while the receiving party a debtor. The debtor finds another party willing to get into a Hawalah contract and discuss the terms. The parties sign a contract which makes this new party a debtor to the bank. Per the agreed terms of the original finance contract, when bank demands a payment, per the Hawalah contract, the second debtor pays the bank. Similarly, for transfer of right or creditor, a bank finances a debtor and then transfers a right to receive the funds or demand the funds to another creditor. A Hawalah contract is signed, and upon the term of the original finance agreement, the debtor pays to the second creditor. Thank you very much for watching. If you have any question, please email us or leave a comment. Subscribe to our channel for further upcoming videos. Thank you.